Good afternoon, and thank you for taking time out of your busy day. I know that as small business owners, time is important to you, but I think you'll be very well served for deciding to attend today's session titled Preparing a Successful Business Loan and Grant Application. Doing so can be pretty challenging, but we've got 4 presenters who are going to give you a wealth of information and provide you with some resources. And I think the best thing, even if you're not ready to prepare or apply for a loan, is that you're going to have people that you can contact close by that you can use as resources. So if anything, that should prove to be invaluable to you. My name is Dom Shababa, and I am a member of the Filipino Chamber, and also working with them on some other things. Very happy to have you here. Before we begin, we'd like to have a couple of people who are our sponsors introduce themselves and talk to you for a bit about their organizations. We're going to begin with Anthony Ogilvie, who is the president of the Filipino Chamber of Commerce of the Pacific Northwest. Anthony?
Yeah, thank you, Dom. Good afternoon. I'm Tony Ogilvie, president of the Filipino Chamber of Commerce of the Pacific Northwest. And thank you for joining us in this second in our series of Zoom instructional workshops for small businesses that are striving to survive during this pandemic crisis. Like Dom said, we have 4 individuals, and they are from different sectors of what is called the business lending sector. We have a legacy bank representative from Wells Fargo, someone from a credit union, and then we have an alternative community bank, and a consultant who will review key elements in a successful grant application. And oftentimes these grants are awarded through local lending institutions. So there's a relationship between applying for a business loan and applying for a grant. Some of the requirements are the same. The presentation of this information is to help you in applying for a business loan or grant. The grant one is due this October 28th for up to $10,000. And once the stimulus bill passes, I'm sure that there will be other available grants. So if you're looking for funds to help you get through this pandemic crisis and you have a cash shortage, please consider applying for these grants. I should mention that we have as our 4th speaker, Marilyn Hall. She is under contract to the Filipino Chamber of Commerce to help Filipino businesses and others to apply if you need help. And don't be afraid to contact her. Our chamber has her under contract with some funds from the government, so we will pay her, for her time. So it's free to use if you use her. Her contact number, as well as those from Wells Fargo, from Harborstone, and from Business Impact Northwest. All their contact numbers are in the instructional materials that was sent out to you probably just about a half hour ago. So please look for that in your email. So again, thank you for attending and enjoy. And let me just introduce Janet Alikpala. She is with the National Asian and Pacific Islander Chambers of Commerces and Entrepreneurs. It's called ACE. She's a project manager with them, and she's been working with us, and she's been very helpful. And so let me again introduce Janet. So the floor is yours.
Mabuhay, kamusta kayo? My name is Janet Alikpala. I'm doing my Tagalog. I have to do it. And I'm a project manager, as Tony said, for the Asian Pacific Islander American Chamber of Commerce and Entrepreneurship, also known as National ACE. I'm honored to speak with all of you today, and I'm looking forward to listening to today's discussion on preparing a successful business loan and grant application, which is very important to learn and understand. Other alternate funding options are out there. I'm also a proud Fil-Am, and I want to mention that I'm glad we have this opportunity to have a strong partnership with the Filipino Chamber of the Pacific Northwest and to celebrate this month, October, Filipino American History Month. Because we should all be proud of the advancements and contributions Filipinos have made to the business community across the country, and even more proud of the opportunity to educate the Filipino American community through these types of online opportunities. I want to share with you now some of the information about National ACE. We're a national nonprofit organization whose mission is to serve as a strong advocate for AAPI business interests and effect positive change on all issues that enhance and advance the goals and aspirations of AAPI business owners. For the past few months, we've worked closer than ever with our national network of over 60 affiliate chambers and partners across the country to ensure that AAPI businesses have the most accurate and up-to-date information about important resources that are available to our community during this pandemic. We're very grateful to Tony Ogilvie, Dam Chababa for helping us provide the space for this discussion today and allowing us to have this interactive forum on this very important discussion. Stay tuned because together our organizations are working on additional collaborations in the near future and beyond. As many of you know, we are just beginning to see the data of the impact of COVID-19 and what it has had on the AAPI business community. Our recent report by JP Morgan Chase shows that the balance of Asian-owned businesses declined 22% in early April. At the end of March, revenues for AAPI businesses were over 60% lower than they were in the prior year. And overall, Asian-owned businesses have experienced severe damage to cash balances and revenues, and they're going to require more assistance from the federal government to fully recover. As many of these assistance programs have since stalled, we know that additional targeted interventions will be necessary for small businesses that have been hardest hit to continue. National ACE has instituted a program to help tackle many of these issues, including helping individual businesses with financial assistance, as well as helping individuals restart their operations safely and strategically. Very similar to the Filipino Chamber, we also have one-on-one consulting available through our CARES Act grant. We've hired certified business consultants as well that are ready and willing to help all business entrepreneurs at any level. And best of all, the services are free as well. Check out our website at acesmallbusiness.org. We can provide that in the chat and feel free to use that service as well. Thank you for having us on this discussion today, and a big thank you to Tony, Dom, and you'll be meeting Frank, Joe, and Marilyn and the team at the Filipino Chamber of Commerce for hosting this event today, and we're looking forward to hearing about this great discussion. Salamat. Thank you.
Thank you, Janet, and thank you, Tony. I'm not going to attempt any Tagalog because I don't want to butcher the language. So a few housekeeping things before we begin. As Tony mentioned, you should have received in your email a packet of information. This packet provides resource information as well as the slides that you'll see presented during the course of this workshop. You have been muted, and so if you do have questions, please put them in the chat. I will be monitoring the chat, and when we get to the Q&A session after all the speakers have presented, I'll be asking your questions of the panelists. If you want a question specified to a particular speaker, please let me know what their name is. If you want the question to all the panelists, then please indicate that also, and I will ask the question of all the panelists. So we are now ready to begin. You are in for a treat as we do have four very good speakers that are going to present a lot of information to you. Unfortunately, our first speaker cannot be shown on camera because of some restrictions by his lending institution, but nonetheless, he's able to join us via phone, and he has some slides that he will share with you. So up first is going to be Judah McLean. He's a business specialist with Wells Fargo, and he will present factors both visible and not visible in the loan application review. So Judah, the floor is yours.
Thank you, sir. I appreciate it. And I appreciate being able to be part of the call here with you guys. Again, my name is Judah McLean. I'm a business specialist at Wells Fargo. I also have silent in the background here, Mr. Mike Martinson, who is a branch manager at the Kent East location. Today, we're talking about what potential lenders look for when you apply for credit. If you're currently seeking credit for your business, you're not alone. In 2017, 87% of small businesses applied for a loan or a line of credit. To give yourself a better chance of getting approved for financing, it's important to develop a strong credit application. So on slide 3 here, I wanted to talk about 4 things that are something we want to consider when preparing your application. So the first bullet point there of the credit purpose, when you apply for credit, a financial institution is going to want to know what your plan is to use the money and that you're planning to borrow, whether it's for equipment or inventory. You should have a clear understanding of why you need the credit. In addition, you want to make sure your credit request is practical. If you're asking for more money than your business can realistically repay, the lender may deny your loan request or make a counteroffer for a lower amount. The second bullet point here talks about credit history, and before making a credit decision, the lender will pull reports to review your personal and your business credit history to find out if you have a history of making timely payments to your creditors and how much debt you have. Recent credit inquiries and interest-only mortgages is something that could affect a lender's credit decision. So the information will help lenders determine whether you're a responsible borrower or not. If you have a weaker personal or business credit report, you want to try and take steps to improve it. For example, you may want to accelerate paying down your existing credit or set up automatic payments to reduce risk of late payments being made. The third bullet point talks about company finances. Your company's cash flow also plays a huge role in your ability to get approved for credit. Lenders will look at how much revenue your business generates to ensure you can repay any additional debt that you end up taking on. Lender may also request collateral. That could come in many different forms, such as equipment or real estate. So make sure you have your financial data accurate before submitting your credit application. The fourth bullet point that we have here talks about application details and making sure that the information is accurate. The date your business was established is one huge thing there, of having the date your company was originally established instead of the date the entity changed ownership or entity type. So an example of that is if you buy a bar that had been active for 20 years, you've only owned it for 6 months, you would put the amount of time that it actually had been established for that 20 years. Sometimes that mistake's made and it can affect your eligibility or approval for the loan that you're looking for. The yearly business sales, you'd want to have your gross sales accurate as to what was on your tax return. The actual net income or profit can also be a factor that comes into play. And then just making sure that the actual business information itself is accurate as for making the decision, so that it has the correct name, spelling, and everything, that everything that's in the application is extremely important to be accurate for being able to get approved for the product you're looking at. If you have a better understanding of what lenders are looking for in a credit application, it can definitely improve your chances of getting approved. Going on to that last slide there, the information that I'd especially like to point out is the wellsfargoworks.com that's there as for going online. That website is a free website for all businesses, whether you bank with Wells Fargo or not. I'm not sure if you have access to the link that I included in the email to be able to post in chat there, but there's a credit center and there's a specific article that actually talks about how to develop a strong credit application. So going into the credit center through wellsfargoworks.com, there's a lot of different testimonials, articles, and information that can help you to develop a strong application and be ready to apply for what you need and be able to provide information of how to build credit properly and to be able to help you with your needs. So that's what I got for you guys today.
All right. Judah, thank you very much for sharing that information. As Judah said in the handouts and what you saw on the screen is information for being able to contact him if you have further questions. But if you do have questions for him, please place them in the chat and I'd be more than happy to ask them when we get to the Q&A. Our next speaker is Frank Matulis. He is a loan specialist with Harborstone Credit Union. And Frank will present general requirements when borrowing from a traditional lender. Frank, the floor is yours.
Thank you. First of all, thanks for having me. I'm thrilled to be doing this. And I think one of the first things we need to, I think, establish is you expect applying for a loan to be kind of an intimidating process. And I think it's actually less intimidating than you think. It's fairly easy as long as you're organized. We're human on the bank side, just as you're human. While we ask questions and expect, answers, there are going to be questions and stuff that you won't have the answers for right away. And in those cases, just let us know that you don't know, and you'll check it out, and we'll go from there. Because what we want to try to establish is some sort of rapport and relationship with you. So, as your business grows and possibly your relationship with whatever institution you're with grows, we become more partners than customer and whatnot, and we can impair, whatever advice we have and give it to you. But there are certain basic steps into filling out your loan applications and going through. And the first one is to make sure before you approach the bank that you have the necessary information that they're going to ask for. And what I've tried to do is list some of it, and some are more important than others. I mean, business license, that's important. Bank statements are important so we can see what your histories are. But the big ones are going to be your income tax returns and your financial statements, because as Judah said, you're going to be looking at information that folks are going to try to ascertain your credit worthiness. And a lot of that is going to be on your past history. It's funny how financial institutions are kind of odd in that it's not the best system where you try to predict future performance on past history, because a lot of things can change from year to year. But right now, that's the best systems that we have out there. So of this list of things I have, I think your income tax returns, your financial statements, and whatever projections you have are important. And by projections, they don't have to be penny to penny, but have a good idea of what generates your cash, what you use your cash for, and how likely you are to collect it or what your returns will be. That way, you kind of determine what your needs are going to be. Once you have all that stuff together, the next thing you need to make sure you have in line is your credit score. Credit scores become more and more important as we move forward. In fact, in a lot of places, it becomes part of the 5 C's of credit. It sort of replaces characters and sometimes. And so it is very important, because banks, credit unions, other folks do look at credit scores as sort of an initial line of weeding out some of the proposed loans and prospective loans. It's sort of like a resume in some respects. If your credit score is below 700, a lot of time you might have a lot of the other stuff ready, but you're not going to get that point because that score is kind of indicating a weakness in paying your bills or collections or whatnot, and that kind of makes a bad first impression on the bank. So make sure you have some idea of what you're doing and what that credit score is before you approach it. And as Judah said, if it's something that needs to be improved on, by all means do so. It's also important to approach the bank with a business plan. And a business plan, again, will kind of outline what you do and how often you intend to make your prices, bring your money in, get your cash flows, get your bottom line. The more you know about it and the more eloquently or succinctly you can speak about it to the proposed lender, the more impressed they'll be by you. So that is a very key piece. Be ready to provide collateral, because collateral is sort of what the financial institution will use to kind of offset the risk. So they're saying, hey, if you're going to borrow, let's say $100,000 for us, you're going to give us the ability to put our lien on your equipment, let's say. So in the event something happens, they have a secondary source of repayment. So you go out of business or not, we can sell it or whatnot. And that's in addition to a guarantee in most cases. You'll also be personally guaranteeing a loan as well as providing collateral. Next step is be sure you know what type of loan you want. Is it line of credit that you need? Do you have issues with working capital? Then it would be lines of credit. So we can look at securing accounts receivable or some intangible type things. Or are you buying a piece of equipment? Or are you buying a building or looking to improve something? Then you can go ahead and get a term loan, because that way you reduce that debt as you go on, and you kind of match the use of the funds to the term of the asset that's being purchased. So it is important to know. And it's also important to know the SBA has some good loans that banks can help you with. And those are loans that are great for areas that might not be fully shored up to go with bank traditional financing. You might be short on a little bit of collateral, or you might not have the appropriate down payment. SBA sometimes is a good option to work with the banks. Again, as Judah said, know what you need. Make sure your dollar request makes sense. I mean, if you need $50,000 for a machine, don't ask for 100,000. Right there, again, you're going to make a tough first impression. And what you want to do again is, the more organized, the more you know about your business, the more you develop that impression that, hey, this gentleman knows what he wants to do, or this lady knows what she wants to do, and it will impact us to kind of on those borderline situations say, yeah, I think we need to give this one a chance. And then lastly, find the right lenders. There are different types of lenders out there. You have banks like Wells Fargo that do real well things. You've got credit unions that are a little different in that we're nonprofits. And so usually if you're a member of a credit union, we'll try to find ways to make loans to you, because basically we just have what interest we collect. Also, just not to burst bubbles or whatnot, banks and credit unions, it's really tough to do startup businesses with them. You might want to look at the alternative lenders with those folks, because we do depend so much on history. But again, just if I can impair anything with you, is that the process, as long as you are organized, is a fairly simple process, and one that will allow you to do well, grow your business, and hopefully work well with your institution and let them help you get to where you want to go. Yeah. And that's hopefully some help.
All right, Frank, thank you very much for that bit of information. Again, for those of you following along, Frank has his information in the email that was sent out by Tony. So there's more information there for you to follow along if you look in your email. Our third speaker is Joe Sky Tucker. He's the co-director of Business Impact Northwest. And Joe will present an alternative for obtaining a business loan from a traditional lender, and in particular, what you can look for or look at. Joe, floor is yours.
Thanks. Actually, it's a new title. I'm the CEO over there. And so, as Frank mentioned, there are alternative lenders out there. And so we fall into that category. We're a CDFI, so we have a designation from the Treasury. I know Harperstone does as well, but a little different view on that. So really at the core of what we try to do is we help small businesses. We have two sides of our house. We have our lending side, which I'll talk about in a second, but we also have technical assistance for everybody that's free and fairly high quality, if I do say so myself here. So we have free one-on-one coaching and business counseling. We also have lots of trainings that are online, so on demand if you need them, and some training series. So we have, and I'll just plug Launch and Grow. So it's kind of business idea to business plan in 7 weeks. There's a little cost associated with it, but there are scholarships available, and it's really worthwhile if you're wanting to build your business up from the ground. We also have dedicated coaches for COVID relief. So if you are struggling with finding resources for COVID, we have 3 folks on our staff that their whole job is to know all of what to do, whether it's helping you with PPP forgiveness loans or helping you pivot your business because of the pandemic, or find resources on there, because I know that lots of you are struggling. Our revenue is just down across the board. I think I'm asked a lot, what do small businesses need? And I say they need money. That's the core of this is money. you can give them as much advice as you want, but at the end of the day, they need to pay their bills. And so we really just need to pump more money into the small business community. So I'll get off my soapbox there, but so we have lots of help that we can walk you through. And we also have loan readiness, and forgive me, I'm gonna cast some aspersions on our banks and credit union friends. It's really hard to get a loan from a bank or a credit union these days. If you're a small business, it's an incredibly important milestone for a small business that demonstrates just where you are and the strength of your business. But generally speaking, you're going to need 3 to 5 years of income, profit, and increasing revenues and strong credit. And while we want all of our businesses to be that, we also know that most of them, the ones that we work with, don't fall into that category. So our job is to graduate you to a bank or credit union to get a business loan. So Business Impact Northwest, we do loans from $5,000 to $350,000. Our interest rates are going to be higher than the banks and the credit unions because our risk tolerance is higher than the banks and the credit unions. We prefer having a credit score of 650 or above, but we've done loans for folks with credit scores in the 400s and 500s if the business is strong. So we really focus on helping businesses, and it's our mission to help them. There's no automatic decline when you apply. Average business size, roughly $300,000 in revenue, and 5 to 7 employees. We will also do true startup businesses. So pre-revenue, all projection-based, loans for small businesses. If you have a strong small business, we do expect some down payment or equity into the business. So that means money you've put in, at least 10%. Typically, our loans fall between $35,000 and $125,000, and about a 5-year term, pretty typical. Debt to income, you'll hear this a lot. That's on the personal side. So we want to make sure, and this is pretty standard across all financial institutions, that is below 40%. And then debt service coverage is on the business. We want to make sure that the business can pay back the loan eventually. We understand for a startup that you might need a little bit of runway, but we do expect the business to be able to pay back the loan. Debt to equity, those are just some other numbers and figures we all look at. We all look at the same things. We just are a little softer around the edges. And we also expect collateral on our loans as well, because we also know that while everyone has the best intentions when they start a small business or get a loan, the best of intentions don't pay us back. And so we will expect some sort of collateral on our loans. We do have exposure on a fair amount of our loans. So it's not like, as the saying goes, we take all available collateral. Doesn't mean that we're 100% covered on them. We are different than the bank and the credit unions in the world because it's our job to be different. We're a mission-based lender. We get a lot of money from the banks and the credit unions to make sure that you all have that kind of first step in the small business lending world. So come check us out. We have lots of resources on our website. And if you have questions, we're happy to answer them, and we're ready to help you grow your business. So I'll stop there, and if there are questions afterwards, happy to answer them. Thank you.
Thank you, Joe. Our fourth presenter is Marilyn Hall. She's the founder and chief synergy officer for NXLVLUP Consulting. And that's quite a mouthful, Marilyn. I didn't know how to pronounce it.
It's next level up.
Oh, okay. Oh, okay. Yes, he's too smart for me. So Marilyn will present preparing your application for a grant request. Marilyn, the floor is yours.
Thank you, Dom. I'm happy to be here and talk with all of you. I will be covering the Washington State Small Business Resiliency Grant Program. And this is money that has been part of the CARES Act that will, for small businesses that have been impacted by COVID-19. And so in order to apply for this, you need to get on, all the grant applications are going through zoomgrants.com. And so you'd have to get on and you fill out an application, or you get in a new account, you do a profile, and then within that, you would click on the previews, and at the bottom will be the grant application. So I'm going to go over a few items here that will be important. For business, it's really for businesses operating in Washington State that have a current business license and are going to have some shortfalls with the money can use for working capital shortfalls due to COVID-19. Applicants can get up to $10,000, and with the $10,000, it depends on how many applicants there are. You might get less than that amount of money. Then they will look at the applications and distribute it geographically depending on how many applicants actually apply for the grant. If you have multiple businesses, each business can apply for this grant. You would have to have a unique email address and UBI number for each business, but both businesses could apply up to the $10,000. So to be eligible, you must meet certain criteria. So the criteria would be operating since March 1st of 2019 and have no more than 20 people on the payroll. That includes full-time and part-time employees as of March 1st of 2020. Businesses need to be in good state and federal state standings, and they aren't accepting anybody who's been disbarred by the federal government, or this is really focused on for-profit businesses. They're not accepting K-12 schools or colleges, libraries, nonprofit organizations. It's really for the small business for-profit. And it's not for people who are pursuing a bankruptcy declaration. So that would create an ineligibility. You also have to document business expenses that are due to COVID impacts during March 1st of 2020 through November 15th of 2020. And if you've gotten grants such as the PPP loan or the EIDL loan, and you've received that money, this kind of funding can't also pay for expenses you've utilized on those funds. So there is an eligibility test that they would go through, and that is the expenses need to be connected to the COVID-19 pandemic. They have to be necessary in order to continue business operations. And then each business owner would have to self-attest that these expenses were not being funded either by private, state, or federal funding. So there's some ineligible expenses that are not allowed. So personal non-business expenses are not allowed to be used by these funds. You cannot use these funds for paying state and federal taxes, and you can't pay for any type of lobbying expenses or activities. Some key components that I want to kind of point out to make sure, a couple of the speakers before talked about really being prepared and organized, is that you will need to have your gross revenue total sales from March 1st to 2019 to June 30th of 2019. And then you also have to have your gross revenue total sales from March 1st of 2020 to June 30th of 2020. And that is really to show that your business has been impacted by COVID-19. Other pieces is that you would need to want to be prepared that if you did get the PPP loan, the Paycheck Protection Program, and or the EIDL, the Economic Injury Disaster Loan, you are prepared to be able to list those amounts as well as the expenses that covered that were paid by those programs, because you can't cross over using the multiple funds for the same expenses. And then the last key piece I want to point out is that they're going to want to know why receiving this grant is important to your business. And that is really an important aspect, is really being clear about what is these funds going to do for your business. And then they would require 3 documents that you would need to upload. And that is a W-9, which is a taxpayer identification number, and then a valid government issued ID. and then a certification of authorization to do business in Washington. So those would be 3 documents you would need to upload. And then most importantly is the deadline. It is October 28th at noon. However, I highly recommend you get it in as soon as possible. And I would give yourself a deadline of October 27th. I've got in several times today, and because this Zoom Grants website is for multiple states managing their grant process. And so there's a lot of heavy traffic right now going on that website. And so there's some delays in getting the website up. So the sooner you can submit, the better that you will have. And I'm happy to answer questions when we're ready for that. Thank you for your time.
Thank you, Marilyn. So if you do have questions, please put them in the chat function. We already have some coming in, so I'm going to go ahead and ask questions of our panelists. But first of all, thanks to each of you for presenting your information and sharing it with us. So this is for the folks that represent lending institutions. What is the ratio of revenue to indebtedness that lenders are looking for?
Wow. Wow.
And so I'm going to start with, I'll go roll call here, starting with Judah, since you presented first. Put you on the spot, Judah. So again, the question is, what's the ratio of revenue to indebtedness that you look for when you're trying to approve a loan?
Well, I'm not an underwriter, so I can't necessarily attest exactly to that. I do know that there can be percentages that they'll lend up to as for what your gross revenue is. And typically, I mean, that can probably vary among lenders. So obviously, just going back to what was said earlier with, I think more than one of us had said, being realistic compared to what your sales is and what you're asking for. I don't know if I can really say an exact number because of the fact that there's different situations can apply with collateral and other things. So really, you would need to end up talking with the specific bank that you're looking to get the lending and what their requirements would be and what the stipulations are going to be for the loan and the type of product you're applying for, because that can kind of vary. So I'm sorry, I don't have an exact answer for you in that aspect. If someone did want to, I believe you said that my contact information was put out to the people on the call. That is something that if you were interested in more information, we could make sure that we got those answers for you and got you in touch with someone that worked directly in the lending team that would be able to have more information for you.
All right, well, thank you. So Frank, same question.
You know, I've been doing this a while, and I'll be honest, I've never really measured anything with debt to revenue. More likely, we typically look more at a leverage calculation, which is debt to the net worth of the company. And so usually we look at that, and it varies by industry, but a rule of thumb that you look at is typically 3 to 1. So for every dollar of debt, you want to have, or every $3 of debt, you want to have $1 of equity in the company. And that sort of indicates that in past years, you've actually made money doing this business, and you've actually kept some of it in the business itself without taking it out to buy the boat or do anything like that. So you've left the profits in there to help the business grow. But again, I'm not familiar with really using debt to revenue, because revenue is a number that gets whittled away depending on costs and other things that go. So it's kind of a factor of profit. So I think you look more at debt to equity.
All right, thank you. And Joe, same question.
Yeah, so similar to Frank, we look at that debt to equity, and since we're an alternative lender, we can go up to 5 to 1 on that ratio as probably the maximum we would do. The other ratio that we would look at kind of on your revenue side would be, it would be 1.1 to 1. So if you have if you're making $110 a month profit, then your loan payment could only be $100, if that makes sense, so that you have a little bit of wiggle room within the revenue that's coming in on an average monthly basis. So that's kind of the revenue, and that's on the sheet too, of just, if your loan payment is 110 or $100 a month, then we want net income. So after all expenses are paid, to be $110 so that you have a little bit of wiggle room there, and then different lending institutions have different kind of valuation on that. And then also sector really plays a lot into it as well. If you're in the construction versus in retail and restaurant, some of these move around a little bit, but for us, that's a good kind of, good bar to think about on as you look at your business.
Yeah, if I may jump in, like we said, being a credit union as opposed to an alternative lender, we do the same thing, but ours is it is higher. It's $1.25, so 125 to 1, and we actually measure it on a figure called EBITDA. So it's basically your profit plus your non-cash expenses. So you could add back your depreciation expense that you had, and you can also add back any interest expense that you had, and you compare that to your monthly payments that are owing. And if it's 1.25 to 1, that's typically what I would say the banks or the credit unions are looking for.
All right, thank you. Next question. What FICO and or credit score is used by the lender? The bank has a score for you, and the credit reporting agencies have their credit reports on you, and their scores are different. So what really is being used there? Again, for all panelists, Marilyn, we'll start with you.
Me? I actually don't, I don't know what they use for the grant. That's not brought up on this program, so I don't feel like I can speak to that.
All right. Judah, we'll come back to you.
I don't have exact information on that for an exact credit score of what you would have to be as a minimum. I know that we take all things into consideration with it, and so I don't have an exact number with that.
All right. Frank?
Again, we don't have an exact number either because it's a factor in a number of things that it's looked at. Again, if you were just kind of putting a rule of thumb, I would say 700 is probably the minimum for us. As Joe had said, he can go a lot lower, but for credit unions and bank, I would say it's 700. And we actually don't have our own credit scores per se. We actually use the Experians and the 3 major credit companies and do an inquiry through them. So those scores that you can monitor and keep tabs on are actually the ones that we use.
And Joe?
Similar, our kind of threshold is 650 is where we like the kind of the minimum to be, but, have wiggle room around that. And, I think if you've ever pulled your own credit and you see that every credit bureau has their own kind of black box around how they come up with that score. And so I couldn't tell you why, if you Experian is, can be sometimes higher or lower than TransUnion. It's because their algorithm just made it that way. I've seen credit scores that have been 750 that I was surprised how high they were. And I've seen ones that are pretty low that I was surprised at how low they are. So they're not kind of all, a 650 credit score or 750, you'll have to do some digging into it. So that's what all the loan officers are going to do. They're going to look through and see what's on there too, because, sometimes the higher scores, they still might have be just over leveraged at just, how they're calculated. So it's if anyone ever figures out why credit bureaus score them like that, I think they'd start their own company or something.
So I would like to say, though, that in the grant process for this particular, there is no score that they're looking for on the application. Yeah.
Okay. Thank you, Marilyn. All right. The next question. Could you speak a little more about startups that may have already been approved for a business loan? And I'm going to guess that the question is, if a startup has already been approved for a business loan, what are you looking for on top of that as a lender? So this is again to the lending institutions. I'll start again with Judah.
Well, they definitely would want to see a solid business plan with what is actually being done. So, as for actual startups, I'm not sure how the funding works for those. I know that if you're purchasing a business and you're looking for help in financing that, and you're going to be the 100% owner, that is something that we can do. But they want to see a lot of financials, and again, business plan is super important with how they expect the projections to be able to look at funding for it. As for if it's just a startup that you're just starting out, we definitely could try and look at the options with that, but I know it is a harder process for that, and I'm not. I'd have to do more research to see what the exact stipulations would be.
All right, thank you. Frank?
If you're a startup that has already been approved, I think the key moving forward would be to try to manage and run your business as closely to your projections that you meet or beat the projections that you presented to the bank when they made that loan. It's also important at that point, I think, to stay in touch with your banker, because things do happen. And if something should go a little sideways or there's a bump in the road, don't be afraid to approach the banker early in the process, because the smaller the bump, the more they can work with you to get over it. A lot of times people are afraid, or business owners are afraid, to approach the bank with bad news, and they wait until it's almost too big to fix. So in my mind, I would say, just work as closely as you can to get towards those, meet your projections, and again, just, try to keep in contact with the bankers, because again, we can help you manage things also, but don't let things get out of control.
Joe?
Yeah, so we have a lot of help for startup small businesses, writing that business plan and putting your projections together. I would say the biggest challenge for funding a startup for us is we're very tough on startups. It's really hard to get a startup loan for us, because you have no history, and there's such a high fail rate of startups. And so you're going to have a really strong plan, probably pretty strong collateral as well, and really know what you're doing. I think the other thing is, if you're like pivoting into a different career and you want to start a small business and you're coming in, we got to know that you know what you're doing. So, a lot of our work is around the nuts and bolts of running a business, of just like how you set up your books, how you set up your plan, your marketing plan, all of that. But if you've never worked in food service and you want to open a restaurant, nobody in their right mind is going to give you a loan, and nobody should. So get some experience, get some, it's just, I've made that mistake like one time. I learned my lesson, and never again doing a loan. So it's harder to get a startup loan because you have, no history. Even 1 or 2 years worth of revenue is better for us to see some trends or kind of help you. But if you're coming in with a true startup, it's going to be analyzed to within an inch of its life, and to make sure that it's a good loan and a good business, and that you know what you're doing, because the fail rate is so high on startups. But it's possible. We will give you a loan if you meet all of that criteria.
Thank you. So, Marilyn, I'm going to put you in a little bit of an adversarial position here with this question. And should a startup business applying for a business grant go to an alternate lender like Business Impact Northwest, or their personal bank first? And if so, why?
I would, it would just, I guess for me, I would go possibly Joe's route to an alternative lender first, because I think that the other lenders it's gonna be really hard to get anything from the other lenders. If you have,
is that because of the lack of history?
History, and they're just more stringent. They're just far more stringent than maybe what Joe's offering can be. If you could get friends and family to help you fund until you could do it, I would go that route first and try and get that way to do it. And like all of the speakers have said, it is really making sure you have that experience. If you don't have that experience, get the experience, be organized, having a business plan, a marketing plan, lining all those things up are really critical for particularly startups, because if you're getting a family to or friends to help fund you, or you're going to Joe, you're going to need to have all those documents and projections ready and be able to speak to it, or else nobody's going to give you money.
All right, thank you.
Yeah.
So this is a question to each of the lending institutions, and it's actually a chance for possibly you to trumpet your own horn. Should the Small Business Administration be the first lender a small business should go to, or should it be someone like your institution? And Judah, we'll start with you.
Well, I guess that depends on your circumstance and what you're looking for. Some of the SBA loans that they've had as of recent, with the legislation that they passed, it was extremely low interest rates, not having to make payments right away. And so, obviously that was an ideal situation for people with the current pandemic and what was going on. So, that was stuff that we were talking with our customers about in general, and making sure that we're doing the right thing and providing options. Of course, with people that I sit down with, we also provide the other options that we have as well. But really, it's about sitting down with your banker and making sure that you're finding the best option that's going to suit you and it's going to help you move forward and provide the tools and resources you need.
Thank you. Frank, same question.
I kind of echo what Judah just said, because I think a lot of times the banks and credit unions and other institutions can be instrumental in helping you get that SBA loan. They can help you prepare, help you go. I think it's a harder process if you do it alone and try to do everything online by yourself. So take the advice that's there. Another thing that a lot of folks don't know is on the SBA side of things, especially, a lot of institutions such as Wells Fargo, such as Harborstone, are what is known as preferred lenders. So basically, the process is such that you approach the bank or credit union and they decide to work it towards the SBA side of things. The actual approval process is done in-house by them. And once they decide that it qualifies for that loan, the SBA automatically takes their approval. So you don't have to go through that second step.
Mm-hmm.
So I think it would be best to approach your bank and in that regards.
All right. And Joe, same question.
Yeah, I think that the misnomer is that the SBA is a lender. They do lending in emergency situations, as we see with the EIDL loans and some of that, like disaster relief stuff. But they work with third parties to do the SBA loans and the guarantee. So we're also a full 7A lender, which is a guarantee. So we can do, 75 to 85% guarantee on loans, and they're scored. We're also a micro lender, so we get money to do SBA microloans, so loans under 50,000 from them. And so it's a different bar to cross if you're going to get an SBA approval, because even with our underwriting standards, if it doesn't score on the SBA side and it wouldn't be approved, we can't do the loan. And I also want to say that I'm making it sound like we're easy to work with. We're easy to work with, but we still turn down 80% of the people that apply. So we're like any other lender. We're not. It's hard to get a loan with us. It's just hard to get a business loan, quite frankly. And so even with all of the different flexibilities that we have, we're not just going to give you a loan because you applied, or because your credit score is this. If you don't have everything in line, I think the main thing to think about is, we don't have any automatic declines, and we can be soft around the edges, but we're not soft either. So it's still, I want people to realize that they're going to apply and we're going to put them to their faces, and
Oh, wow.
All right. Well, thank you for your honesty.
Yeah.
We're creeping up here on 4 o'clock, and I wanted to be cognizant of people's time, but we do have one last question for each of you, and it really focuses on relationship. And how important is it to meet with your local business specialists or other loan officer and to get to know them. And I'll start with you, Marilyn. I know that you're consulting for us, but also we are making you available to folks. So there is an opportunity for them to establish a relationship with you. So how important is that?
Oh, I think it's incredibly important. Having a very close connection is really important so that for me, I can understand what they're going through in their business and what the challenges are and how I can help them going forward is really important. I've worked with other Filipino businesses before as well. And so it's really important that I have this close connection with the business owner to understand what are their challenges, where they want to go, how can I help, and steer them in the right direction. I don't want to steer them in a different direction, or there's no cookie cutter really way. It's really what is it that is unique to them and their business, and what are their challenges and how can I help them. And so I think the relationship is incredibly important.
All right, Judah, same question.
Well, I definitely agree with what was just said. It is extremely important to have a good relationship with your bank and your banker, and be able to have someone that you trust and that you're able to actually discuss things with. It is going to help you plan and look over your relationship to really help you with moving forward. One of the clients that I sit with, I develop a strong relationship with and connect with them on a fairly regular basis to not only make sure that everything is going well, but that I'm helping them look forward, asking, what do you have coming up and the things that they may miss. And there's a wide variety of things that can happen with that. So having a relationship with your banker where they're able to provide that proper advice, whether it be for the right lending need that you're looking at that's coming up, whether it be expansion or just how to pay for a piece of equipment that you need to get, as well as going through the actual application process. And if you apply for something, having that person that can go back and look at the situation and have it re-looked at. Sometimes there can be things that decline. And, I've had experience where I've gone back and had things looked at, and it's not every time that I've done this, but I have got the underwriting to take a look at it, and you got it turned around in the process to work for the client. So having someone that's in your corner that really cares about you and your business and will do everything that they can to help you move forward, as long as it's the right thing, that's extremely important to have.
All right, thank you. Frank, same question.
No, I think you guys are all on your own. No, I agree. I agree with what everyone is saying. I think it's really important to establish a relationship with your banker, because a lot of times, your banker can see things in the financial statement and make suggestions on things to try that can improve things like cash flow. And they're just little things, We can notice things that, hey, you're giving 30-day terms to your people to pay you, yet you're paying your bills in 10 days. So for basically 20 days of time, you're paying bank for somebody else. And we can notice things like that to help you manage your cash flows and make other things. Or we can suggest products that we have at the bank that may help you. The more we have a relationship with you and the more we know about your business, the more we can help and be of assistance to help you grow. I've always been amazed at what people do to make money. It's fantastic. Yeah. And the other last thing is, when in my career, what I've noticed is, there's three. It used to be this. We used to call it the stool. Every good business had a good relationship with their accountant, with their attorney, and with their banker. Now I think it's a chair, because I think the insurance companies are just as important. Yeah. But the one thing I've always said is, if you go to your accountant or you go to your attorney with questions, that meter might be running. You come to your banker with questions, we're free, so you might as well get it. But I do think it's really important to establish a relationship, and it's beneficial for the bank too. It's beneficial for both sides.
All right, thank you. And Joe, same question.
Yeah, absolutely. I think, no one's going to say not to have a good relationship with your banker. I think the other thing is if you're working with us, you should always also keep a good relationship with your banker because you're going to need a business account. And working with whoever's kind of holding those and your merchant services and that sort of thing is really important. And also working with them as you grow so that you can work kind of refinance us out of the picture essentially at the right time. So if you're in touch with your kind of financial institution holding your accounts and with us, we can really work in tandem to help you kind of get to where you need to be. Because again, getting to a bank and a credit union is so critical because the access to capital is so much higher and the rate that you're going to pay on that is so much lower than what we can offer. And so it's really important to graduate to that level. And so if you're working with us and with them at the same time, I think it's just going to be much to your benefit.
Right. Thank you. So I do want to kind of close out the session with something that was put in chat. And this attendee wrote, "Loving the honesty from everyone here. It's really helpful to hear different perspectives. And that is the benefit of us being able to bring this together and present it to you so that you as participants get to hear different perspectives, actually can begin to create a relationship if you want to with our panelists and use them to your advantage and help to make your business successful. I'd like to thank each of our panelists, Gina McLean with Wells Fargo Bank, Frank Matulis with Harborstone Credit Union, Joe Sky Tucker with Business Impact Northwest, and Marilyn Hall with Next Level Up Consulting for taking their time and offering all their help to you guys out there. Thanks to Anthony Ogilvy and the Filipino Chamber of the Commerce of Pacific Northwest, and to Janet Alakpala with the Asian, with ACE. And lastly, you don't see her, but she's in the background making sure that all the technical aspects are being taken care of. And that's Emily Footer, also with ACE. So thanks to everyone. We do have 2 more Zoom workshops coming up, one on November 5th and one on November 22nd. Both are Thursdays, both are at 3 p.m. Pacific. And those will be a little bit more focused on social media and technology and how you can use that as a business advantage. Thanks once again to everybody. This has been recorded. It will be posted on both the Filipino Chamber's website if you want to revisit it. And I believe it's going to be posted on the ACE website as well. So thanks to everyone for attending, and good afternoon, and enjoy the rest of your evening. Take care. Bye-bye.
Thank you, everybody.
Bye.